Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital and Tyreek Hill of the Miami Dolphins. Thankful to have Tyreek joining us this morning after what was an outstanding Sunday performance where the Dolphins routed the Chargers. All right, let's get into this morning show, starting with Money Manor. Money Manor, good morning.
Good morning. Tyreek rolling me to what's likely to be my only fantasy win this week, so stoked for him as well. And Jalen is starting the revenge tour.
All right, Diamond Trades, good morning.
How we doing? Had to throw up the Penn State background as they absolutely smacked Delaware. Couldn't even fathom, representing the Giants right now. I have to reset after that absolute blowout loss yesterday, but we'll get into it.
And Stock Sniper.
My team absolutely killed it, but I was going up against Tyreek Hill, and he put up like 45 points or something ridiculous like that. And
crazy.
I'm only winning by like 5 points, and it's going to come down to tonight, which I didn't want it to even get this close. But I think I'm still going to win in both my leagues, but we'll see how that goes.
All right, well, good luck to you, brother. Never good when you got to go up against Tyreek. All right, Fed forecast and economic calendar.
Yeah, let's do it. Let's start with the economic calendar for this week, which is pretty busy. Early in the week is relatively quiet, but it does definitely heat up towards the end of the week with CPI on Wednesday before the market. Thursday, we've got PPI and retail sales before the market, as well as the weekly jobless claims. And then on Friday, we're going to have Michigan consumer sentiment at 10 o'clock. Friday is also quad witching day when you have single stock options, index options, index future options, and some other derivative all expiring on the same day, creating some volatility. So I'm sure that we'll see a lot of that on social media and people talking about the impact that will have. Usually it honestly just creates a bit of volatility before the market open on Friday. It's not something to be ridiculously stressed out about. Earnings. So earnings pretty light this week as well. The only real notable names that we've got: Oracle today after the close, Cracker Barrel, great spot on Wednesday before the bell, and then Adobe Thursday after the market close. Let's go ahead and dive into last week's trading. So the story of last week was really centered around NVIDIA and Apple, two behemoths that have lost a bit of steam as of late. Apple dropped 6%. Following that news out of China that they had banned government officials from using iPhones, and then NVIDIA fell 6.1%, bringing it down nearly 10% off the fresh all-time highs that we set there at the end of August. These two stocks alone are responsible for 30% of the S&P 500's year-to-date gains. So when they're not doing great, others tend to follow. Energy and utilities were the only sectors able to squeeze out a green close last week. All of the rest of the market was red, which is a sign of risk-off sentiment, along with the dollar pushing higher, about 0.75%, and the 10-year closing at its highest year-to-date level. So all of this is ahead of an ever-important inflation reading that we'll get on this Wednesday that will likely play a key role in the Fed's decision on whether to keep rates steady at 4.25% to 4.5% or hike another 25 basis points at their meeting the following Wednesday. So that's not this Wednesday, but next Wednesday, the Fed will come out with their interest rate decision. In addition to CPI, PPI retail sales, again, we do have quad witching. So do expect that volatility. The last bit of news from the weekend that I want to cover here is Pinduoduo. So Grizzly Research released a much-anticipated report alleging that they believe Pinduoduo, a $95 billion Chinese multinational e-commerce platform, is a dying fraudulent company, and its shopping app, Temu, is a cleverly hidden spyware that poses urgent security threat to U.S. national interests. Grizzly purports that Pinduoduo's popular e-commerce app Temu is, quote, the most dangerous malware / spyware package currently in widespread circulation. Obviously, if the information in the report is true, you'd expect government officials to get involved. Obviously, bad for the stock. Two things to point out here before jumping to conclusions. First, the second half of the report details claims of fraud by Pinduoduo itself. So Pinduoduo, Temu is the app, the shopping app, the e-commerce app that is a subsidiary of Pinduoduo, the Pinduoduo Holdings, the parent umbrella company. The second half of the report alleges that Pinduoduo, the parent company itself, has been sort of skirting under the radar, committing like wide scale fraud of investors, which if that is the case, EY has been auditing them for several years. And so everybody here has sort of dropped the ball, and that just seems like slightly unlikely. I guess we'll have to see as more information comes out. And the second thing is that China did just take those security measures against Apple last week, as we mentioned before. So if regulators wanted to step in here and retaliate under the guise of national security concerns, this seems like a perfect time to do so. So that's the primary story from the weekend. Manor, what do you got?
I'm kind of taking a look this week into positioning because while I agree with what you said going into quad witching, I think the intraday action on Friday is going to be horrendous like it always is. But I think there's a case here where positioning throughout the entire week could lead to a decent move here. So I wanted to start the week kind of taking a look at net call flows we've been seeing lately. As we saw this really rough start to September with all the negative tailwinds we've been discussing really over the last few weeks with energy prices rising, yields rising, all of that was really kind of in tandem with the CPI print coming out this Wednesday. And that's why we saw the longer duration of the curve go up as inflation is expected to come in 0.3% higher than last print last month. So I was kind of looking at with all of the positioning we're having right now, where could we start to move to? And I think there's actually a potential here for a decent short squeeze into the end of the week. You can see net call flow has followed the 2-month lows thanks to the rough start and the pullback we've seen in equity markets. And then if we get a look at into short flows in the market here, short flows have moved up to 10-month highs and year-to-date highs thanks to this pullback we're seeing. So basically everyone is getting out of longs and starting to move into shorts, thinking we probably saw high of year. And did we not? We'll see. But I think moving into monthly expiration here and quarterly expiration here on options, there's a possibility for a decent mover to the upside if inflation comes in low. So looking at the S&P 500 here, 4450 and 4500 are major nodes for gamma exposure moving into the end of the week. I think with a decent move off of CPI, should we push through and get a daily close above 4500, you're going to see a bunch of unwinding in the dealer level, which is going to push us probably higher and get a lot of people buying back the dip here. So I think, as we always say, price action always leads sentiment. And I think while sentiment right now is really beaten up, we could definitely see a move into the end of the week here with the right economic data coming out, obviously. That could immediately get us right back into a buy the dip mantra. And then we'll see how we close out September. Going to take it 1 week at a time, but that's really what I'm watching into the end of the week here.
Yeah, I don't hate it. I mean, volatility to be expected, especially the week before FOMC. Definitely things to keep on the radar. That'll wrap it up for us here at Fed Forecast. Pass it back to Alejandro.
Let's take a look at the system. So there has certainly been some challenging trading to start September, which is, typically how things just go in September. It's one of the more difficult trading months. But the fact that we sold off is obviously no surprise. Bodes nicely with seasonality, and we're tracking decently. But also we got the sell signal on the system with the bearish cross of the 10 SMA below the 50 SMA on both the 30-minute and 1 hour charts. So you guys know the drill. This week for bulls to gain some control, they're going to want to clear both the 30-minute and 1 hour 50 SMAs. And so it's short the pops until we do that. Currently in the pre-market, we're actually at a very interesting spot in the S&P futures. For those that have already rolled over to the December contracts, the level to watch is right where we're at currently, 45.35 to 45.40, which is where the sell-off started last Wednesday on September 6th. Okay, so it looks like we're running up now to back test that level. And if bulls can reclaim and start to push over that, that would certainly be bullish and would be a good sign for what has been obviously a weak start to September. But keeping in mind that for momentum to be in the bulls' favor, you're going to want to see a buy signal, of course, that break over the 50 SMA on both the 30-minute and 1 hour charts. And just keeping things simple and not over trading in September is going to be crucial. Okay, there are those months, there are those periods, notably the end of August, the entire month of July, parts of June, where there was a lot of beautiful trends. We may not see that in September. And so the less you trade, the better shot you have at making money. And over trading is going to be really deadly as it always is. All right, that's going to do it for the system. I'm going to pass it over to Stock Sniper now for Bet the Bell.
Time for the best part of the show. We're going to start this off as we always do. We're going to be looking at the standings. We're going to see that Diamond and Hondo are going neck and neck right now, 58 to 59 wins. Both pretty good ratios right there, if you ask me. Pretty interesting to see that the lowest person is 57%. Don't know who that is, but looking pretty good on the stats. I'm going to go ahead and transition this over to our first question of the day, which you already know what it's going to be, green or red. And I'm going to start this one off with Hondo.
I'm going to go green for today.
Green. Diamond, what you got?
I am also going to go green for today.
Money Mander.
I am also going to go green for today.
Looks like I'm going to make it green across the board. We can see that we're slightly green right now in the pre-market.
Red day guaranteed.
I'm sorry?
Red day guaranteed.
Chill with that. But I'm going to go ahead and jump over towards our next question. And this is one of the more interesting ones. It's one of those would you rather owns, which you guys know that I have a little history of asking some of these. But would you rather own $500,000 worth of Coinbase stock, or would you rather own $200,000 worth of Google stock? I'm going to go ahead and start this one off with Money Manager. I know he's excited to answer this one.
I think as much as I love Google, I think I'm going to take Coin here just for the possible risk to reward. I really like where the daily chart's kind of setting up here. I'm going to take the Coin here. I mean, you're giving me 2.5x what I would get in Google, and I think it's actually a decent position here for the stock, so I would take Coin here.
Forgot to mention one thing for those of you who might not have seen the previous questions. You must hold it for at least 1 year. No selling.
Everyone here knows my love for Google, but I'm going to take Coin.
Yeah, I'm kind of surprised by that, man. I don't know if I agree, but I'm going to go ahead and jump over to Hondo. What are you taking, the $500,000 worth of Coin or the $200,000 worth of Google?
So currently, Google is my favorite name to own, and we've talked about Google a lot. My favorite stock, but I'm going to have to go with Coin. The reason being, obviously you're getting a really nice head start there with the 500K versus the 200. But Coin to me has shown a lot of resiliency. And there's been a lot of shit that's been going down with Coin and obviously with crypto over the past couple years. And the stock has gotten sort of a bad rap, but continues to weather the storm. And I think, when things are said and done, Coin could be a major player, at some point in the future. And I think it's definitely an interesting name to own. And, 500,000 of it versus the 200,000 of Google, that makes sense to me.
I see. Diamond, what you got? You going to jump on the bandwagon?
Yeah, I think I have to. I mean, just given the initial allocation, 500,000 versus 200,000. Like if I think about it this way, like if the market holds up, I could see Coin honestly rallying more than Google if the market holds up into the end of the year. And that's just based off of where Coin is at right now, not necessarily like looking at the businesses themselves. Because like when you're talking like a long-term question, I think Google makes sense because obviously it's the better business, and over the long term, you would bet on the better business, even if you're starting with less. But in this situation, it's like more of like a medium-term thing. If the market holds up, you could see Coin, rally 100%. Like I don't think that would be like absolutely insane, especially if Bitcoin picks up into the end of the year. And they just got the regulatory win with the Bitcoin ETF, which would obviously help. So yeah, I would probably go with Coin on this one.
I'm gonna have to take Google. I feel kind of weird now, but I could damn well see that 500,000 worth of Coinbase being worth 150,000 in a year, or also worth 2 million in a year. But I think that Google will be closer to 200K than Coinbase will be to 500K. I'm going to go ahead and transition into my final question for today. And my question is about the U.S. dollar. Do you guys think that the U.S. dollar will remain strong throughout 2030? Now, I have a quote by one of our friends, Markets for Mayhem, And he's got a little graph that we put here that's pretty interesting. And it's about the world's reserve currency right now. To get you guys the visual, I'm sure it's not there right now, but 59.8% of the world foreign exchange reserves is in US dollar right now, with our second one at 19.7% euro. My question is, by 2030, will US dollar still be the world's reserve currency? Will we still be looking good on the US dollar front? What do you guys think? I'm going to go ahead and start this one off with Moneymander.
Yeah, I'm going to quote Alejandro here and say, look through the noise like he always does. And there was so many tailwinds coming out about the dollar. If you go back to when the Saudis and everyone dropped this as their reserve for oil backing and everything, dollar was trading at $100. Everyone said the dollar was dead. This, that, and the other. Recession was going to come tomorrow. Dollar's up 5% since then. So I think there's really just too much global dependence on the U.S. dollar, regardless of whatever anyone wants to say, this, that, and the other happening. I think the dollar is still the golden standard here for global reserves, and it will remain that way.
How about 2050?
Well, 2050, I mean, shit, who knows? that's 25 years in the future.
Yeah. I didn't want to write that one. I wanted to hit you with a little blitz. Hondo, what do you think? Will the dollar remain strong throughout 2030?
Never bet against the greatest country in the world, brother. That's all I got to say.
What about 2050?
Never bet against the greatest country in the world, brother. That's all I got to say.
Diamond Trades, what you got for me?
Yeah, I'm kind of in agreement with Sal. I think that when you look at the United States position, especially relative to the rest of the world, it makes sense. It doesn't make a ton of sense to bet against the United States dollar, and I'm talking more like in the short term future, like 2030. I think that when you look further out into the future, there are definitely some problems that we have to resolve. A lot of unfunded liabilities coming due with Medicare and Medicaid, things like that. That I think down the road will probably Social Security as well. I think down the road that those are going to definitely be problems that we're going to have to tackle, or the case begins to build against shifting away from the U.S. dollar as the global reserve currency. But I think for at least a short term, which when you're talking about reserve currencies, 5 years is a relatively short term. You got to bet. Can't bet against the U.S. dollar. That's just my take.
So I got to be honest, I think I do like the U.S. dollar through 2030. 2050, I think I still do like it to be the world's reserve currency. I think that we could see a lot lower than 69.7% of the world's reserve currency in U.S. dollar by that time. But one little source of information that I just want to drop here is called Principles for Dealing with the Changing World Order by Ray Dalio. Now, this video will definitely teach you a thing or two. And this kind of is one thing that inspired me to ask this question today. But that'll wrap it up for Bet the Bell. I'm going to pass it back to Hondo here.
All right, guys. Appreciate everybody tuning in. First episode of the week is a wrap. And Moneymander is gone. My goodness. All right. Good luck trading this week, everybody. It's going to be a wild week. Oh, there it is. And nice, Ryan throwing the Rams logo.
Man. And Ray Dalio would not bet against the U.S. dollar.
Really?
Greatest economy in the world.
I mean, his entire video was kind of anti-U.S. dollar. I'm not going to lie.
I don't think it was anti-U.S. I don't think it was anti-U.S. dollar as much as it was like highlighting the issues like we were talking about. Is like, here are things that are going to definitely be a problem that we're facing going forward as a nation and as a reserve currency. And, here are the problems that we have to tackle if we want to remain on top. I think that he was just highlighting those issues and sort of detailing what happens when you don't and making it very real for people who, haven't really put that thought exercise in their mind and just assume that we're the greatest country on earth. Like, you got to put things into context and, look at what's happened in the past and say, look, in the past when, nations have these problems and they don't address them, here's the downside to that. And I think that that's really was the goal of the book and the videos, to sort of just highlight those things.
I thought it was a promotion for the yen.
No.
I'm joking.
All right. We ready to wrap things up? Anybody got anything else?
Take it away.
All right. We'll be trading live all day, guys, in the King Capital Discord. Go to king-capital.com, scan the QR on the code. Special thanks to Tyreek for joining us. Thank you, Tyreek. And we'll see you guys back here on Wednesday morning at 8:30 a.m. Eastern Time. Have a great start to the week, everybody.